Good morning, guys. How are we all doing? Happy Friday, everybody. Welcome to Trading with Dan. I am Dan from Trading with Dan. This is our Bitcoin morning update. So if you guys wouldn't mind smashing that like button, we shall go straight over to those Bitcoin 4-hour chart. So yes, we had the Fed step in and flood the market with their rate hikes that the market obviously already knew about anyway, has been priced into the Fed fund futures. But yeah, nonetheless, the market didn't particularly want to hear it. And whilst we were looking so good in Bitcoin and obviously in stock markets as well, looking very good, we were pretty swiftly slammed back down. So if you want to look at the stock markets first, you can kind of see if we extend this downward channel, what we are actually doing is back testing that, and then also testing this support area again. So could it be a forward check, a back check of this channel breakout, and then we catapult onwards to the upside? It very well could be, especially seeing as it does also coincide with this support area here. So with all that being said, it does basically mean we've got to bounce from here. Maybe we can hang around here a little bit, but today, especially into Friday, because traditional markets will close, we do need to make progress away from this support area, and if the opposite happens and we come lower, then it will probably be a pretty disgusting move into the closers for this Friday, and then the market will look at this over the weekend and not be too happy about it. So yeah, tough times in these markets. I mean, clearly this is what has obviously dragged Bitcoin down as well. So, but yeah, so it is still trying to get above and close above and hold above 42,000. That is the name of the game for Bitcoin. On the plus side, we are still holding 40k even with all this. I'll call it FUD, or even with all this FUD. So yeah, I would suspect if stock markets do hold here and we do get above 42 again, then I do think that will be our chance to accelerate higher and hold above there. But clearly we've got our low level of support. But well, on the plus side, that is still quite a bit lower than where we are at the moment. So we have got room to trade down here before obviously the bullish case scenario of taking out 42. And then obviously if you lose this support, then yeah, we will be looking lower. So all eyes pretty much on the stock market. I mean, that DXY, look at it, just disgusting again. Was looking like we were potentially going to have a pullback, and then that was slammed straight back up, obviously with the highly politicized Fed. Have not cared about inflation forever, up until the point that it affects their candidates, their Democrat candidates, basically midterms. So it's just politics. Market can get thrown on. I mean, literally they'll do everything to support the market until it comes to obviously the power structure, and then obviously they'll throw the markets under the bus. But yeah, that is what's happening. Just disgusting move in the DXY 10-year. I mean, we can't say it's a disgusting move. It's holding up where it has been, but yeah, knocking on that 3% mark there. I mean, you can probably tell that I'm just quite a bit bearish on these markets. It's not ideal at the moment. Obviously we're hoping for some sort of a pullback and a relief in some of these wayward moving numbers, but yeah, we weren't to get it quite yet. So yeah, there you go. What else do we want to look at here? Yeah, the Ethereum USD pairing, just battling with that $33,000 level. The Satoshi pairing still sort of hanging on in there, but it is looking like this could be a top and we could have a pullback. So on that basis, that could be foreshadowing a downward move in Bitcoin. And then clearly we are in the stock market, we are closer to obviously the support level, so we're obviously a lot closer to that breaking than we are obviously breaking above the resistance level. So yeah, things are not looking too good. We do need a turnaround today. We do need something. Obviously we've got UST and Do Kwon potentially going to pump the crypto market. So that we've got that, so maybe that can help us out. but obviously it won't affect the overall macro trend of where we're going. It will just obviously potentially push Bitcoin higher to a relative different level compared to obviously the rest of global risk assets going forwards. If you get what I mean, it will just kind of push Bitcoin higher, and then we'll start to trade lower from a higher level, along with the rest of markets that will then in that scenario be trading lower. But yeah, pretty much not great looking markets. It is Friday. These tapes need to be printed today in a good fashion. We need to get a rally up from here. What happened to the PPT that were buying the S&P futures overnight? The big problem, obviously, everyone's talking about it, is the Japanese yen that has just been basically relentlessly devaluing. I think it's something like 12% in the last 35 days. That is a ridiculous move for a currency to go 12% in basically just over a month, to basically devalue by 12%. This is because they are pinning their yield curve. And that means that people don't want to hold the Japanese yen when the yield on the yen is obviously being pinned lower, when they can hold the dollar or anything. Basically, even the euro yield is increasing, the pound yield is increasing. You can just go and sell your yen and buy that. I mean, you can sell your yen, buy the dollar, and get like nearly 3% on the 10-year. Imagine that, because you didn't used to be able to get anything on the 10-year. So yeah, something will have to give there. It will have to be either, there are three things. One is that basically they decide that they're gonna stop the peg on the 0.25% yield on the JJB, or they're going to or the currency will just continue to collapse and maybe accelerate. I mean, obviously it's devaluing pretty fast anyway, but it could have an acceleration. Then they would have to stop the yield curve control, because obviously this is Japan's a massive import economy, so they have to import practically everything. If they're paying 12% in the last 35 days more for everything, and then some if it continues, it ain't ideal, put it that way. And then the third thing is that basically the gap could get closed the other way if obviously like global yields then come back down. But I mean, that doesn't look like that's happening, so that doesn't look like an option either. So it'll either be the currency or the yield curve cap. And I mean, it is pretty obvious to me that unless you get relief from global yields coming down, it'll have to be that yield curve control cap. But yeah, these yields are coming down until something breaks, basically. I mean, everyone keeps saying that. It's such a done to death statement at the moment. It's going to keep going until something breaks. Then the stock markets are probably going to have a crash, and then the yields will start to come down again. I mean, that just seems to be the course we're on. I don't think there's much else that can be done about it. I don't think conflicts across the globe and supply chain problems and everything that's been going on is helping at all the situation. That probably couldn't have been helped anyway, even without these adverse factors. So all I will say is always darkest before dawn. When sentiment is massively bearish, then we can only really go up. But I mean, if we just want to look at stock markets, we're not even at any ridiculous lows here. We're just kind of at the midpoint of obviously this new range we established, this high, this low, and then we're just hovering around roughly towards the midpoint, maybe the lower mid. But yeah, so we'll have to see. Today will be pretty important because, like I said, yesterday late in trading was pretty disgusting. If we get follow through from this, we're done. We might as well take our ball and go home. If we can get a bounce from here, then yeah, into the weekend it maybe won't look so bad. But yeah, we'll just have to see. At the end of the day, inflation is running very high. Obviously in the 8 to 9% on the official figure. So even the Fed raising rates like it's going to, we are still going to have basically pretty much have inflation based on those statistics. So inflation hedges such as stocks still should be a buy even in that environment, because the real yield is clearly still deeply negative, even if the nominal yield is threatening to go a few basis points higher positive. But yeah, there we go, guys. Remember, this is not financial advice. I'm not a financial advisor. Let's hope for a good day today. Always do your own research, and I shall speak to you guys soon.